Currently in the process of repeating one of my most favorite and prized technical formations, Cardano. Cardano, that is exactly right, is in the midst of doing something that has historically led to multiple of hundreds of percentages of gain. So with that in mind, I do want to welcome you back to EllioTrades channel. I'm your host, Krown, again today, coming at you from good old Helsinki, Finland, as we are back home now from good old Dubai. Had a great time now, had a phenomenal time there, actually. Really amazing city, but we have more important things to talk about today, like Magic Internet Money and, more importantly, Mr. Cardano today, as there's actually a lot of requests for this in the comment section that I have noticed. And so while I don't necessarily respond to a lot of the comments, I do sincerely read them because it really does help me sort of curate the content for this channel, as that is, well, I want it to be relatable. So with that in mind, we're going to jump into Cardano today, as it is doing perhaps one of the most important things that I've seen, well, in a very long time for Cardano, that is. And what are we seeing? We're seeing an obvious consolidation here, but that is not it. What was that whole intro about? What am I referring to? What essentially is the chart of the day? It's quite simply this, perhaps the most simple thing possible, but the most important thing possible. And if there's one thing that I ever want you to get from what I am saying, it is this: trend, 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 trend. Trend, and 50 billion more times. And what do we have right here? We have a slew of higher lows, especially after basing out at a major support area just around that $2-ish region. Multiple chances to break down with all these wicks below, and all rejected thus far. And now we are getting our fourth successive higher low in the process right now. So we're going to go over a bit of a setup here. Of course, this is going to come with an invalidation on the other side. Please understand, when it comes to the game of trading, there is no 100% guaranteed trade, no matter what you've heard in the good old interweb or YouTube lands or wherever you get your crypto content or trading content from. In my experience, after a very long time of doing this, it has still not been able to be done, even amongst some of the best traders that I do know. Anyways, with that in mind, this is very important right here. Trend is, in my opinion, maybe not just the most important thing, but perhaps after so long, I've actually circled back to thinking that it might just be the only thing, quite literally. No, of course, there's a million damn ways to trade, of course, a million ways to skin a cat, as the saying goes, but this one I do quite like. So what do we have going on here? Again, higher lows, and we do have about the same highs. You could call this a bit of a range, obviously, and we can mark it off like so, basically 240 to the upside versus that $2 number that we spoke about at the beginning to the downside. As long as Cardano is within this range right here, overall good, and it does keep this trade idea alive. That implies, to get this out of the way very quickly, if Cardano does start to break and close, specifically close dailies below that $2 mark, will be invalidated, and will very likely set up a trade on the other side, probably looking at, well, 169, 170 at the very minimum, with continuation probably implied before that, or sorry, below that. But for right now, things are shaping up to be rather interesting right here. This is going to be accompanied by some very powerful things, of which I want to bring you over here to the daily BBWP. Again, if you are new to my sort of analysis style, BBWP is a volatility indicator. Volatility would be the second most important thing in my, at least in my opinion, after trend. And in this case, we are at a 0 percentile. First and foremost, what is volatility? It's the measurement of the dispersion of returns. And this particular indicator right here is just running off of the Bollinger Band width, which is a volatility-based indicator. And then we've ranked all of those entries into a systole format, in a percentile format, essentially. We are quite literally at a 0 percentile format. And with a mean reverting indicator, that does imply that expansion of this is, well, inevitable. Now, can this take a little bit more time? Yes, absolutely. This could take another, perhaps another week, maybe 10 days or so. But I do suspect that this thing is going to start to move sooner rather than later, if you catch my drift. Perhaps early this coming week is what I'd probably be looking for. Unlikely over the weekend, although certainly not averse to it as well. Anyways, it's not just that on the daily, by the way. Oh, by the way, it's not just that. It's also on the weekly right here, which I've actually gone ahead and marked off these entries, which is really going to be more like this. And as you can see, we have had several iterations where we do come down around that 50 percentile read. And they have produced some pretty phenomenal, well, moves in the past. Now, volatility, I should denote before we get into this, is direction neutral. Usually I want to match this up with trend and then momentum in order to kind of get a bias on which direction it will resolve in. And in this case, well, because we do have those higher lows, that is setting in the criteria that is going to be obviously necessary for an uptrend, which will be very, very important for the resolution of then the volatility expansion. Let's go through some of the historical results of this and see what we're kind of working with right here. As the last time we saw it get all the way down here was November 2020, almost 1 year ago, actually, and almost immediately put in about 100%. But as you'll notice right there, that was not the stopping point. In fact, we didn't even see a reversal there, just a sideways consolidation, continuation, and continuation until this over here. Now, again, it is a little bit difficult to sort of say exactly where we stop on this one. Obviously, this one then on the next leg gets to about 350%, very impressive. But the way that I measure it is as I go until the BBWP starts to get back above 80 to 90 percentile. And you can see that doesn't necessarily happen until here. To be fair, that is, again, a number that I am not comfortable saying. I'm not saying that this can't happen, obviously, but I do want to be a little more curtailed in my excitement. I don't like to produce FOMO when FOMO is not necessary. These are very relatable results, whether you're even looking at that first leg over here, or the second leg over here, and of course the third leg giving about 1,313%. And we can play around with those numbers, of course, as well. We have another iteration right here after that next sideways consolidation from wick to high. What do we see? About a 200% gainer. I would argue not bad. And then we have another iteration right here. And this one is rather interesting as well, as it does take Cardano basically from a low of 117 all the way to the next high of, well, about $3.50. That's another 200% gainer right there as well. Or sorry, 3.25. I stand corrected. So let's play around with numbers right here just for a second. If we really take the lowest end of this, the most, let's see, modest of those gains, what would Cardano be looking at? Or as I like to call it, Carderpo, but we will not discuss that on this channel here. Well, let's say about 100% typically on those first legs. That would put Cardano actually just above $4. Very interesting. If we were to add, let's say 300%, as we did see on the second leg, that would put Cardano in the $7 to $8 range. And well, anything above there, obviously our minds are going to start to run wild, but we can just do it for clarity's sake. Where does 1,000% put this thing at? Above 22. Let's just see if that's relevant for anything. So as you know, when things do get into blue sky breakout territories, that would obviously imply in this case, I like to look at Fibonacci extensions specifically on the logarithmic scale. And what I mean by that, to clear up some of the comments that I got from this last time, is if you go into your setting, if you're into your indicator settings over here, you want to make sure that this is ticked. Fib levels based on log scale. That is what we're looking for in very immature assets. Immature meaning that they have not been around for too long. And in this case, you know, anything realistically below like 5 years is, you know, going to fit the bill for that for me. If you're looking at very long-term historical analysis, probably want to look at it as well. Anyways, you can see, I already gave away the short term, what I'm looking for right there, but it's very interesting to me to see that that $4 area is right in line with the 3-spot 618 Fibonacci extension right here. Actually smack dab between there and the 3-spot 414, two areas that I really, really like for these sort of like macro type of rallies, which I do believe we potentially are entering into over the next few months here, which brings me to my next point. These are long-term setups, obviously. Not happening today, not happening tomorrow. Obviously, you know, can get going during that time, but I wouldn't look for the totality of it, you know, at least for another few months, realistically, is probably the time that we're looking at. Longer term, I don't have Fibonacci extensions that go up high enough, so we'd have to come up with a more long-term one, which we actually could do based off of the more long-term accumulation that we saw in this asset, which actually starts where? This would start right here, in fact. Let's just see if that does line up with anything. I'm going to get rid of the smaller one just to see if we do see any of those other numbers pop up. We see the 3 spot right around $10. Interesting. Do we see anything around $20? Yes, indeed we do. The 3272 and the 3414 out of the macro accumulation range. Interesting things to be aware of long term, of course. So with that in mind, I am going to get off this chart, and I want to just show a few more supporting things that make me interested in looking at this. And the next one would be the ADR over here, which Do we want to go over this? Do we want to go over the bi-monthly first? Let's go over the bi-monthly. We're already here, of course. This, of course, is a bi-monthly, meaning 2-month chart. And while it is, again, relatively new, and it sometimes is a little more difficult to trust things that are relatively new, obviously, whenever I do see something trading above the topside Bollinger Band here, which this one has, and we've seen this plenty of times on this channel now, on a very high term time frame like this does speak towards the macro scale. And so Bollinger Bands, of course, going to be a volatility-based indicator. We are seeing them expand yet again, meaning that volatility is expanding on a time frame like this. And trend is obviously just basically straight shot up. So as long as Cardano is basically above the topside Bollinger Band, which is 210 in this case, we could just siphon that down to $2 and make it nice and consistent amongst all timeframes now, or all timeframes that we've spoken about today, that is. Then I am essentially macro bullish, looking for this consolidation to be resolved to the upside. Short-term target would be confirmed with a daily closure above 240, and then I would be looking for an extension all the way up to about 280, somewhere around about 280 for the short to medium term after that. That is actually going to be supported over here as well by momentum oscillators like the daily stochastic, not the daily, the weekly, more important actually, much more important in fact, which would resolve above 243 or 242.38 it looks like. If that does happen, I would really be looking for this run to get going after that and look for those more long-term targets over the next few months. That would be kind of my confirmation for that, as this one is really wound up right here and dare I say ready to go. I want to just bring up one last thing over here. We can go over to, I believe was the weekly ADR. Yes, indeed it was. And this one is very, very telling as well. What do we have right here? The ADR is actually below the 1 read. These are advanced decline ratios, by the way, and this is incredibly interesting to me because this thing can really roll up. Essentially, this is kind of a measurement of a consolidation in a way. I'm doing a terrible job of explaining this. This is not scientific in any way, shape, or form, but I want to make this relatable to someone who might not be too familiar with it. And when we get way down here, we are very, 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 very intensely wound up, if you will. And essentially, I wouldn't even be looking for medium-term tops. So we get all the way up to about 3.5 ADR. And that's, again, advanced versus decline. And then long-term on the macro scale, we do see major, major moves at the 8 read right there as well. Anyways, all of those do look very, very good to me. Again, we'll go over the invalidation for this very quickly. Below $2 on a daily closure. This is all invalidated. There actually would be a trade on the other side as well. Somewhere down around about 169 would be the first area that I'd be looking for. I do not think that things would stop there after a bit of a quick bounce. I do think that things would come down significantly further towards about 125 to 130 after that. But for right now, this does appear to be a little bit more on the bullish side, or actually several more things on the bullish side than the bearish side. Just want to see 240 taken out to the upside, especially on a weekly closure. That would be the next major thing to be waiting for. With that said, I want to send you off on your very merry way. I want to thank you again for all the support on this channel. It's been phenomenal. And with that said, take care. I'll see you in the next one.